Imagine this, guys, if someone invested 1 lakh in 2023, it would be almost 5 lakhs. But recently the stock has fallen more than 25% from its all-time high. RSI is oversold, technical indicators are weak, and many investors are asking one question: is this a buying opportunity or the starting of the bigger fall? Let's break it down in simple language, guys. Many people still think this is just Zomato, but the company actually changed its name to Eternal Limited in 2023 to reflect a bigger vision beyond food delivery. Today, Eternal operates 4 main businesses: Zomato, Blinkit, Hyperpure, and Dristic. So technically, this is no longer just a food delivery company. It is trying to build a complete food and quick commerce ecosystem. The journey started in 2008 as a foodie bay created by Dipender Goyal and Pankaj Chadda. Later, it became Zomato, expanded globally, and finally got listed in 2021. One of the biggest turning point came in 2022 when the company acquired Blinkit, entered 10 minutes delivery business, and now in 2022, the company rebranded itself as Eternal. Why? Because the goal is to build something much bigger than just food delivery. Now let's look at the numbers, guys. Current price is around 236, market cap roughly around 2.3 lakh crore, P ratio is around 900 plus, ROE is around 0.06, debt is very low with debt to equity ratio is 0.01. So financially the company is almost debt free, which is positive, but profitability is still relatively low compared to valuations. That's why the stock always trades at premium valuations. Over the last few months, the stock has been under pressure. Returns in 1 month is minus 15%, in 3 months minus 15%, in 6 months about minus 27%. But if you zoom out, 3 years returns still more than 340% plus, guys. So long-term investors have already made massive money. The recent fall is mainly due to profit booking and concerns about competition in quick commerce. The biggest growth driver right now is Blinkit. Quick commerce is exploding in India, guys. People want groceries, snacks, and even electronics delivery in 10 minutes. Blinkit has been expanding aggressively by opening hundreds of dark stores and increasing deliveries. But here is the catch, guys. Because of this expansion, profits sometimes fall due to higher investments and operation costs. So investors need patience. Quick commerce is basically becoming a delivery war. Companies are competing on speed, discount, and logistic efficiency. So margins will remain under pressure in the short term. Another recent development is founder Dipender Goyal stepped down as CEO in 2026, and Blinkit founder Albinder Singh became the new CEO. This shows the company is clearly focusing on quick commerce growth. In other words, Blinkit might become the main growth engine for the company in the future. Now let's look at the chart, guys. Current price is around 235. Important level, first support zone is 230 and next support zone is 220, and the major resistance is 250 and next resistance is 270. The RSI is around 28, which means the stock is oversold. When RSI go below 30, sometimes we see a technical bounce, but most moving averages are still bearish, so short-term trend is weak. There are several long-term positives. First, massive growth in online food delivery. Second, quick commerce industry is growing extremely fast in India. Third, strong brand power of Zomato and Blinkit. Fourth, large institutional ownership. FIS and mutual fund holds big stake. Fifth is almost debt-free balance sheet. But investors should also understand the risk. High valuations, intense competition, profit margins still small, heavy spending in quick commerce. So the stock will remain volatile. In short term, stock may move between 230 to 270 range. If it breaks 270, momentum can return. But if it breaks 230, it could test 210 levels. Eternal is basically trying to build India's largest food and instant delivery ecosystem. Food delivery, groceries, restaurant supply, dining, and events. If this strategy works, the company could become one of the largest consumer internet platform in India. But remember, growth companies always comes with high volatility. So the big question is, will Eternal become India's tech giant or will competition slow it down? Let me know your view in the comments, and if you found this analysis helpful, like, share, and subscribe to Another Capital for more simple breakdowns like this. Thank you.